Former Fed governor forecasts showing lower optimism on post-crisis growth could shift how Canadian investors position rate-sensitive holdings in RRSPs and TFSAs before the next policy window. This is Modern Investing Techniques, episode 148. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. The S&P 500 closed at 7,674, up 0.4%. The NASDAQ Composite finished at 26,180, also up 0.4%. The TSX Composite gained 0.7% to 36,620. Kevin Warsh's archived forecasts from 2007 through 2011 showed he consistently saw less productive capacity and a higher unemployment floor near 6.2% than his peers. Minneapolis Fed President Neil Kashkari highlighted tariff pressures, the Iran conflict, and AI build-out as reasons he doubts inflation will reach target soon. The next Fed decision and Bank of Canada path remain the key macro frame for rate-sensitive sectors. Historical Fed governor forecasts offer a window into how central bankers privately viewed economic slack and inflation risks during periods of upheaval. Today's release of Kevin Warsh's quarterly submissions shows a policymaker who consistently saw less room for unemployment to fall without sparking prices than his FOMC colleagues. Canadian investors can apply this by cross-checking current Fed projections against archived governor data to gauge whether markets are pricing in overly optimistic slack assumptions. Implementation starts with pulling the St. Louis Fed's Fred archive for past FOMC projections, then comparing them to today's SEP dot plot using a simple spreadsheet overlay. The approach worked best in the 2010 through 2013 period, when actual unemployment undershot the Fed's own estimates, rewarding those who positioned defensively early. Risk lies in overweighting one governor's view when the committee ultimately decides. Imagine you added a rate-sensitive ETF to your TFSA last month after the latest dot plot showed 2 cuts priced in. Your order filled cleanly, but the real information edge sits in the gap between what the current committee projects and what individual governors once submitted privately during similar shocks. Warsh's post-crisis submissions, released only after he left, show he placed the sustainable unemployment floor near 6.2%, while peers saw more slack. That single difference altered how he read inflation risks quarter after quarter. Professionals always pull the full historical distribution from Fred before the next FOMC meeting, rather than relying on the headline median dot. Most retail investors treat the published SEP as a single consensus number and miss how wide the internal range actually was in past cycles. The concrete fix is to download the individual governor forecasts for the last 3 comparable periods and mark where today's median sits inside that historical band before sizing any duration trade. This is a simulated trade for educational purposes only. No real money is involved. This is not financial advice. Today's practice investment is a weekly hold in ALK, Alkane Resources Limited, on the TSX. The strategy is a catalyst entry on new high-grade domain discovery at the Cuffley Lode. Fresh high-grade intercepts announced August 23 expand known mineralization below the Augusta mine. Price action remains above the 50-day moving average on daily charts, with volume running near the 20-day average. Nearest support sits at the prior swing low from early August. The stop loss sits 8% below entry to account for typical junior miner volatility. The target is plus 4% to plus 9% over the 5-session window if follow-through volume confirms the discovery. Confidence is medium because the discovery adds a clear fundamental catalyst, yet single-name precious metals names still face sector rotation headwinds without volume spike confirmation. The invalidation level is drill results from the sub-KC domain failing to extend the new high-grade zone beyond the initial intercept widths reported. This pick isolates how a single drill intercept can reset valuation multiples for an exploration name while forcing discipline on volume confirmation before entry. No newly closed trades since the last review. The most recent practice investment has already been reviewed. Current holdings remain open and pending their scheduled evaluation, so there is no new realized result to report today. The Interactive Brokers TWS scanner filters for TSX and NYSE names meeting volume above 20-day average plus catalyst event flags in a single custom scan. Canadian investors running TFSAs use the free tier to surface names before retail flow arrives. Set the scan to refresh every 15 minutes during market hours. Wealthsimple Trade watchlist alerts send push notifications on price crossing a user-defined moving average or volume threshold. The feature lets TFSA holders act on the exact technical levels discussed in the episode, without watching screens all day. JP Morgan strategist notes major indexes remain in bullish trends, yet sees growing probability of a seasonal pullback driven by AI concentration and macro uncertainty. Trim growth tech exposure by 5% of portfolio if NASDAQ closes below its 20-day moving average this week. West Virginia is directing 50% of new hyperscale data center revenue to offset or eliminate state income tax, creating a direct fiscal tailwind for operators locating facilities there. Add WDC and EQIX to the watch list for any pullback below their 50-day averages. Amazon is deploying steering wheel-free robotaxis in San Francisco and Las Vegas that operate bidirectionally and charge for rides. Watch for any follow-through volume above the 20-day average in AMZN before adding to a tech allocation. Portfolio performance uses simulated $1,000 trades under the published rules that began August 18, 2026. Total trades stand at 52 with a 54% win rate of 28 wins, 23 losses, and 1 break-even. Cumulative P&L is $277.08. Matched window alpha versus NASDAQ is negative 1.7% across one rules-based trade. Too few trades to call an edge. This is a scoreboard, not evidence. Average return per trade is 0.53%. Best trade reached plus 20.11%. Worst trade reached negative 11.80%. Current streak is 2 losses. Open your brokerage platform, pull up ALK on the daily chart, and mark the 20-day average volume line. Note the exact price level 8% below Friday's close. Set a price alert at that level so you can review the drill results before deciding on any position size. Before we wrap, watch whether volume in ALK confirms the discovery zone on the first trading day next week. That's modern investing techniques for today. If you found this useful, share it with a fellow investor and subscribe wherever you listen. Check the resources page for tools and platforms we discussed. We're back tomorrow. Keep learning, keep investing. And if you'd rather watch than listen, find us on YouTube at NARA Network. Links in the show notes. This show comes to you from the NARA Network. If you want another sharp daily briefing, Offshore North has you covered. Offshore Ocean Racing Explained every Monday with a Canadian angle. All our shows are free at naranetwork.com. And on the website, every episode's visuals live in our free image gallery at naranetwork.com gallery. Royalty-free under Creative Commons. Download with attribution. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't last?